for the 12th and 13th of November, and markets continuing to be reasonably volatile, throw us lots of questions about the near-term direction. But we'll try and sort through all that and provide you with some direction both for the short and the medium term. I guess the fundamentals are really making a very strong case for markets to fall and possibly fall significantly. But some of the technical indicators are starting to look better, and certainly some of the sentiment indicators, if you're a contrarian, are indicating that the overwhelming odds are for the markets to move higher because sentiment readings are so incredibly negative. So there's certainly some mixed signals, but I guess I would go with the sentiment indicators and the charts before I would go with the fundamentals based on history. So I guess I'm getting a little bit more positive, and this is a seasonally stronger time of year into Christmas. I don't think it'll be plain sailing, but I think generally we may see markets move higher, and certainly some sections of markets move perhaps considerably higher over the next 6 weeks or so. So just a reminder, this is general advice only. We're only providing the information and the structure for you to make your own decisions. So let's have a look at the action for the week. The S&P 500 index finished just 10 points higher for the week. It was a little bit all over the place, but ended up in the black. So just some more consolidation after what was a very powerful rebound in October. So sentiment readings, again, generally pretty negative, some of them quite negative, which from a contrarian point of view really is providing a few strong buy signals. And I gave some data in the large cap alerts for members to support that. The ASX index closed up by 15 points on the week, so again didn't do very much. That was only about 0.3%. And for me, the line in the sand is 4515. If the index was to get above that, then I think that would be quite bullish. Gold closed $33 higher on the week, so we've had a pretty good week and continues its pretty good medium-term uptrend. Silver was a little bit higher on the week, and copper marginally lower, but pretty good rebound on Friday. So commodities certainly coming back nicely after that bit of a fright we got at the end of September. So just covering off on the general strategy, it's pretty much unchanged from last week, as you would expect. We're buying the dips on quality stocks. This is a seasonally stronger period of year. But it's still not the time to go chasing any speculative rubbish and tips in the pub and the like. And I still get members sending me email requests about various stocks that they've had tips on or heard about, and most of them are really, really poor quality stocks. So my strong advice is stick to quality stocks, and in the resource space, quality producers. The emphasis will obviously continue to be on gold producers that are in clear uptrend. Not all of them are, so we do need to focus on the ones that are moving higher. And also to continue to increase our shorting to companies that have got excessive exposure to European debt. And one of the things I noticed over the last week or two is that while the S&P index has been moving higher, the financials have actually been lagging that rise in the S&P index. And then, of course, the metals and index trading for members who are participating in that is going along really, really well. In fact, it's generating more profit than any other section of what we're doing. And yeah, for those that are tracking that, then I can tell you that it is going extremely well. So let's have a look at the charts, and I want to start this week with the German DAX index, because obviously a lot hinges on Europe and the stock markets being a leading barometer of what's going on economically. Certainly looking better at this point. You can see here that on the German DAX, this is March 2009, you can see we had a very strong rebound from under 4,000 points, got to about 7,500 points, formed a big phase 3 top. This was really the first warning of that phase 3 top in March of this year, and then it basically rolled over and crashed from above 7,000, got down to 5,000, and since that point has started to rally back up again, and you can see it broke this downtrending channel, and we had a particularly strong rebound on Thursday and Friday. So certainly the German index is looking a lot better and certainly defies the fundamentals. So I think if that index continues to hold up and perhaps even move higher, then that's a very bullish sign for markets in general. So that's one to keep an eye on. This is the S&P 500. This is on a monthly chart. You can see we've had a very strong run from March of 09. We had one 2-month consolidation in 2010. We've now had a bit more of a significant consolidation, but that was only to a partial retracement level, and it's started to head higher again now. Let's have a look at the index on a daily chart, and you can see here that we've rebounded. We've gone up to 1292 so far. I've got 1301 as my line in the sand as the maximum retracement area. You can see we do have this down sloping resistance line, which at the moment is sitting, I'll just move that around a little bit. So at the moment that is sitting at around about 1310. So I'm looking for that a break of that, or that to hold as an indicator of the medium-term direction for the S&P. But at the moment, my feeling, all things considered, if I had to toss a coin, I would probably go for the market heading a bit higher into the typical end-of-year rally that we seem to get. Let's have a look at the Australian market. That's it on a monthly chart. Zeroing in on a weekly chart, it's not recovered anywhere near as well as the US, but it certainly has rebounded off its bottom, and it has moved out of this downsloping channel that we had since it's done that. So it was quite a clear downsloping channel that we had from April through to the lows in early October. Since its rebound, it's really essentially gone sideways and hasn't really done much now for the last month. Let's have a look at gold and silver. And the gold market, you can see rebounding very nicely. We've gone now beyond the 61.8% retracement from this 6th of September high to the lows on the 26th of September. So we've moved beyond that. So I'm looking at maybe another $40, $50, $60 upwards in gold, and then perhaps a more meaningful correction of this bounce. But I'm fully expecting that this green 150-day moving average will be the support level for gold in coming months. So looking to buy the dips on the opportunities there. And finally, this is silver. Silver hasn't rebounded nearly as strongly as gold, but at some point it will kick in and outperform gold by a significant margin. At the moment, I'm looking at a rise to maybe the mid $37 area. Could go higher, but I'm expecting some resistance at that area. Getting a little bit of a pullback. So again, still just looking to buy the dips in silver. So that's really all I wanted to cover from a general perspective, and members will be receiving the specific chart update on our portfolios. So that's it for this weekend. See you next weekend. Cheers.